Can you put me up on the screen, Joseph, and stop stressing me? Hello, everyone. Welcome to Land, Lunch, and Learn for this month of May. My name is Solomon King, and I'll be your host for the day. Dr. Helen, I see you. 𝗘𝗿𝗆𝗆𝗲𝗃, thank you so much, everyone, for coming through. Um, if you can hear me, please just indicate. We seem to be having some technical difficulties, and but our speakers and everyone is here already. We just need to be sure that all is well. I can see that there are 27 of you already with us. Um, please let me know if we can be seen and heard clearly before we get to. It's not your feedback I want. I want the feedback from the community out there. So I'm not even sure who is talking to me now. If I'm live, Joseph, your feedback is unimportant to me anymore. Dr. Ellie, thank you. So, if you can see, can you hear me? Yes, we can hear me. Oh, great. Thank you all so much for being here. Um, Fantastic stuff. So, we will just get to it quickly. Sorry, we're a few minutes behind. Without much ado, we will just get into the conversation of the day to share around due diligence, what angels need to know concerning due diligence, what to look out for. And we do have with us a very formidable guest, somebody who was one of the pioneers of the Lagos Angel Network and a very respected name globally in early stage investing across Africa. He consistently, on a weekly basis, provides perspective and insights on the different angles and edges of early stage investing out of Africa. And so we're glad today to welcome an accomplished venture capitalist with proven experience in funding, scaling, and leading startups from very early stage to join us. Oh, fantastic. You're here, sir. Oh, great, 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 great. Can we please bring our guest up? Yay! I see you. Welcome.
I like the sound effects. So.
Oh, great. Thank you for being here. How have you been, sir?
I've been good. I've been good.
Where, where's the money going to these days?
Given the intro you gave to me, apparently I have to give it to you now.
Oh, you want to give me the money? Yay! I like
Yeah,
that.
given all the intro and all the nice things you said about me, I said, I need to pay for that one.
Great stuff. Thank you so much. But for the sake of the audience, a little small background into your game and what you do, and how long this has been. Let's meet you, sir.
Okay, so just by way of going through my life very quickly, so I studied as an engineer and essentially started working as most entrepreneurs start after school. Realized that I wanted to build something. I was in San Francisco. I went to school in um, California, and essentially started out my first company after working as an engineer. It was a fintech, built, venture financed, sold out. Then took a quick break, went to business school, tried my hand out at consulting. I realized I'm not a consultant, I'm an operator and an investor. So did some angel investing, came back to another startup in Cali, um, founded venture finance, built, sold. That was in gaming. Then did it again in fintech. Um, and then after we venture finance, built and sold that as well, we realized that it was time to come home. We really wanted my children to grow up in Nigeria. So came back with a private equity firm, Africa Capital Alliance, into a portfolio company. Um, Prior to coming back, I was talking to Tommy and Collins and Lan, and Lan was formed. So I started angel investing as well, but decided to form a fund. And about seven, I guess it's almost 8 years now. Yeah, 8 years ago, started out Beta.Ventures. And the goal is to invest in early stage tech companies that are changing lives on the African continent.
Awesome, awesome. Rich background. Quick one for somebody who's made the transition from angel investing to VC and then PE these days. What's the difference?
Between angel investing and PE
And
or
a full fund model, yeah.
when you lose money, you just have to talk to your wife. When you lose money, you have to talk to investors. So it's very different. And I think that there's a rigor as well that is a little bit more expanded on a fund size. There's an administration, a management, a reporting. So there are all these things that are outside the actual finding a fund. I mean, finding a company and investing in it. But it's just to keep your LPs, your investors in the loop, and to ensure that they are going along the journey with you as much as you can, share that journey with them. I think the harder part, and I mean, I don't say it in a flippant way, but the harder part of structured investing is when it's your own money, you just have to have a conversation with yourself or within your family, and that's where the conversation ends. But when you've made wrong decisions as to when to bet and or when to invest, um, maybe how you helped an entrepreneur through a difficult time and it didn't work out. You have to be able to have those kinds of conversations with your LPs as well and guide them through. And realizing that there's some people that invest for a return, and there's some people that invest because they want to participate in a game. There's some people that invest because it makes them feel good, the altruism as well. So they need to be involved, and it's, I'd say, one of the bigger differences between structured investing versus just investing out of your own pocket.
Great. You may, I don't know if it's just my end, but we might need you to increase the decibels of your sound so that you're a bit more audible.
It's probably because my mic fell off. Can you hear me now?
We can hear you.
Okay.
We can hear you. So, due diligence. What does that mean to you? not as the VC player now, but more around the early stage angel investor prism.
So I think due diligence basically is, so let's think of it like a painting, right? You're trying to figure out what you don't know or the holes that you have to fill to complete the picture, to understand if this is a good investment or not. So that's what due diligence to us is just trying to complete the picture, to see if it is something that we feel comfortable investing in. I'd say that just like paintings, you own them for years. The positions you have on these companies you own for many years. So you would like to make sure that you are devoting not just your cash, but you're devoting your time to the right types of companies. And if you have a clearer picture of where you think they are headed, then it just gives you significantly more comfort in being able to sit still as the companies develop. And it takes time for them to develop. And you have to have that patience to be able to sit still.
Do angels overlook certain elements? Are there things that, because, like in the painting scenario, people are used to these founders or just take a liking to them, are there elements that we then overlook as angels that we shouldn't?
Yeah, I think that I mean, there are quite a few things, but let's just pick two for now. I think one of the things that angels significantly overlook, or let me not say that they overlook, they get enamored by, and that causes overlooking some of the other elements, is the product. So maybe you see a product and you say to yourself, my goodness, that's an amazing product. And you don't really ask the questions that are around the product, around the usability, the market, the size, what the opportunity is that you're going after. So that's one, is you overlook the diligence that you have to do because you're enamored with the product. The second is markets. So people say, let's just say, for instance, fintech is hot. So it has been hot for a while. But if you actually think about the market size, people say very large market, that anything that goes into this market will work. And they overlook sort of the diligence elements that are aside from the market. So if you look at the product, you look at the market, you're excited about both, you say, I'm investing. But there are other things that go into figuring out if this is the right investment. So I think that the overlooking happens because people like the product or they feel is a huge market. So they quickly dive into an investment without asking some of the other questions that they need to ask.
Nice. Then I'm now drawn to the deeper end of this conversation where I'm now saying, how do I know that this business is just early as against, or this business is fundamentally weak?
Well, it's a very good question because it's very difficult to really answer the question of is it early or is it weak? Because those questions are best answered in hindsight. So I would say that the way I've looked at it from is it early versus is it weak is from a standpoint of the early conversation you can usually answer a lot easier because you're asking yourself, do the entrepreneurs know the direction of a market? And let me unpack this a bit because I think this is one thing that I think angel investing is a little bit difficult on. Is if you're investing in an entrepreneur and you know more about the market or the opportunity or the direction of a market than the entrepreneur, it's just a bad investment. It's historically just bad. But if the entrepreneur can tell you something about where the market is headed and where they expect the market to end up, then you know that there is a direction on the market, and you just have to figure out what needs to happen to get to the destination. Okay. And it might be that the entrepreneur is greatly underestimating what it will take to get to that market. So maybe, for instance, the person looks at their chart and they say, we're doing something in this space and we believe that the regulatory body is going to give us approval in 1 month. We're going to get product to market in 2 months. So by the time we get everything done, it'll be 3 months. But if you're a knowledgeable investor that has invested in regulated markets, you realize the regulatory authority does not take 1 month to make a decision like this. And part of your DD will uncover that it is going to take a lot longer. Or maybe it's the adoption is going to take a lot longer. You cannot launch an innovative product and expect it to essentially start tracking very quickly. So that's the too early side, right? You can figure out things that are too early if you just dissect what needs to happen before things actually go the right way. I think the other is if it's fundamentally weak. What I would say is the fundamental weak situations are usually around the first instance that I gave, is that the entrepreneur doesn't really know much about the marketplace. So we realize that companies, as they form, will need to shift. So you go in, you realize that there's some assumptions you thought were right, they're ultimately not right. So you have to shift. If this is something that entrepreneurs don't have a foundational knowledge about or deep knowledge about, it makes it a very difficult shift. They can't recompute the path that they have to take. So they ultimately end up with the same idea, moving at the same pace, and it can't pivot. And you could have told them that on day one. So I think that there are sort of fundamentally weak ideas because there is a lack of depth in the understanding of the problem that is being solved, which means any solution is superficial, replicable, anyone can build it over the course of a weekend.
Nice. You touched on something that I want to take you back on for a bit. So this was quite categorical when you said if as an angel you know more about the industry than the founder who's building, then it is a potentially bad investment. So my brain is saying, is it possible that as someone who's more experienced, the African um, adage that says what an old man can see sitting, a younger person will climb an Iroko tree and not see. Does experience have a part to play in such a scenario so that you may know more than the founder and it still being a good investment?
So let me refine that statement a bit. Okay. So there are certain industries that are mature, and deep knowledge is required in that space. So there might be sectors that are now emerging because if you think about startups, startups are usually around overlooked opportunities. There are sectors that are emerging or aspects in a market that are emerging. So I might, for instance, know a lot about oil and gas, right? And when entrepreneurs come to me, I can talk about my days at Shell and all the things that we did and doing offshore. What you find is that an entrepreneur might come in and start talking to you about marginal wells. And I'm intentionally not talking about startups tech here because the nuance of that is a little bit gray. But for a lot of people, oil and gas is an easier one. So you might be talking about marginal fields. And I know oil and gas, so I know the sector. But you, as the entrepreneur, have identified the emerging opportunity in that sector. So you will know more than me probably about marginal wells. But I can tell you a lot about the oil and gas sector. So that is leveraging someone that has significant knowledge on the oil and gas side. But the opportunity is in the emergent sector. So you can actually apply the the old man and the Iroku tree to that kind of
Scenario.
problem. Now, the problem is if you walk in and you're talking about you're doing marginal fields, and I ask you about marginal fields, and I know more about marginal fields, and it's not my expertise. I'm oil and gas, yes, but marginal fields is not my thing. And you can't answer questions. You don't know anything about it. You just know that there's money there. It makes it a difficult investment that you, if you're in the oil and gas field and you're looking for those types of molecule type investments, you will look for someone that does have that depth on the marginal side. Because the way that a broken clock is right twice a day, you are going to pivot in some way. And if you don't know anything about the sector, the pivot is not possible, which means that the first sign of trouble, that company is probably going to face very difficult positions that usually ends up in fold up.
Great. So this question, this next one, is totally unscripted, but as I hear you speak, it just comes to mind to say, which do you remember a situation where you've done a due diligence session around the founder as an angel that was not thorough enough and you paid dearly?
Yes, many times. It's called 𝗘𝗶𝗹𝗆𝗍𝗄. you you learn from it and you learn very quickly. So I would say early on, right? So you have to think about my perspective. I was coming from like Silicon Valley background where ideas require speed and essentially you make some assumptions as to the entrepreneur that you're dealing with, as in depth, capability, that you're doing this for a reason that makes sense. So deploying capital was quick. So we had made a couple of investments just to save the entrepreneurs the embarrassment because they're still in the ecosystem. We will not mention, well, I will not mention names of entrepreneurs or companies, but let's just talk about the situation. So coming from that background, there are some exceptional ideas, right? And we thought billion-dollar opportunities. Until this day, some of them are still billion-dollar opportunities. We're just waiting and looking for the right entrepreneur to face them. And we would fund that at the drop of a hat. And what we found out is that in Silicon Valley, sometimes you find that people are leaving jobs at Google that are paying them 400,000 to go do a startup. So the conscious decision to do that startup is a very costly one, which means the person has a lot at risk. So they would essentially do that and you would angel invest on that. We invested in this and it was idea stage and basically great idea. But unfortunately, the execution was not there. And you realize that what the person is giving up is not a lot. So it's just a trial and error for them. If it works, it works. If it doesn't, they didn't lose anything.
Mm,
But what is lost is a significant amount of capital and time
yeah.
on our side.
Mm,
So we had, I will sensitively try to talk about it to give you an illustration. We saw this company, we liked the entrepreneur. They came in through an interesting source. We're really excited about the possibility. We dropped cash in. We brought a few land people in on the deal. We led the deal. deployed the capital. Um,
How much capital are you talking about now?
well, you have to think back in the day. Back in the day, when you pull together all this capital, I mean, you're doing less than 100,000 rand of cash. So we pulled together the capital, we deployed it. And after we deployed it, we were helping the entrepreneur in uncustomary ways, in that um, my partner deployed in as chief operating officer to help him do sales.
Mm.
He had to go to the marketplace, and I would jump in a can go with him into the market to find customers, and we talk to people, traders, and everything. And then we finally closed deals for him, and now it was just left for him to deliver the technology solution.
Mm.
So he had this big order, and remember, he's brand new. He has no inventory. I mean, he has no infrastructure. So we got one of the big industrials. We brought them in as an investor. They had him situated on their plant in their environment. So he had 24-hour power. He didn't have to think about these things, and it was a tech manufacturing type thing. So he had a big order to deliver. And we had just structured something with the German Chamber of Commerce to do a deal that once he had done the big order, we were going to go to the Bavarian companies and show them how we're doing these things. And Germany, Nigeria route would be done. We're on to like 100 million value. And we said, deliver the order. And the entrepreneur told me that he had a speaking engagement in Joburg. And I said, are you serious? He said, yes. I said, okay, it's a binary choice for you. One, you can deliver the order, or two, you can go to the speaking engagement. But the order needs to be done by the end of the week. My young man went to the speaking engagement, hadn't done anything yet.
Wow.
So I think you realize that that was actually a very foundational investment, because there was another company in our portfolio that mirrored the same thing. Two of the founders, one of them jackpot to Canada when they didn't get into YC. They were running a business that was doing well. They didn't get into YC. They shut down and left. So I think for us, it really revamped the way we invest. So we rarely do idea stage. We always wait for the product to be out in the market and for the entrepreneur to have taken some cannon. So they have decided whether or not they have the grit to ride this through and whether they have the desire to build a company. But it's really helped us with, from a fund perspective, with the companies that we're invested in. The loss rate is very low for us in terms of companies, just by introducing that one screening criteria on the
Which
grit,
is
the desire
which
side.
is so how do you measure grit? So Land recently took on middleman technologies. Um, so that was the last deal that we did. And speaking with one of the um, more experienced angels, 𝗘𝗿𝗆𝗏, he was really excited about the China Nigeria trade route and what middleman was doing in there. Then he says to me, his only concern is, do these people understand that it would take 10 years and more for this to germinate? Now, with that kind of conversation, how does an angel tell that a founder is in it for the long haul? How does an angel see ahead to say, hey, this person would not give up midway? Is there a way to measure grit, a way to measure an entrepreneur's staying power?
I would say that there are. It's just, it depends on the type of person you are. That you, so let's say for, well, let's rewind a bit. There are two things that I would suggest. The first is dependent on the type of person you are. We do a lot of listening when we talk to entrepreneurs. So entrepreneurs will tell you what they're thinking without saying it in full paragraphs.
Absolutely.
If
Absolutely.
you listen to them, you ask, what are you, let's just take an example. We were looking at this company which was uncustomary for us, and it was in a space that we don't invest in, but the financials were looking exceptionally attractive. But the entrepreneur kept on dropping hints as in where he was headed. And after the meeting, I just turned to my partner and I said, I don't think this guy is doing this to scale the business.
Mm.
He's doing it because he wants to get into a Nollywood, that there's a Nollywood element in here. He wants to be a star. And he said, okay,
Is that
you
Ike's end
know
or
what?
my end? Okay, he's there. I think we have some challenge with
Yeah, so it
Ike.
was invite him and the other founders to dinner just to talk. Um, at the dinner, we kept on, we do this thing called probing. We keep pushing you to expose yourself. At the
Absolutely.
dinner, I think he shouted at his other founders. They were not on the same page. And it uncovered what we thought all along. But you just have to get there. It's not that it's a bad company, it's just not a company for us. So
Mm,
somebody else can do that deal, and that's it. So I would say that what we do is we listen
mm,
to just see if we can sense the things that are making us uncomfortable. And you have to be able to ferret out those things because that's what allows you to probe, to at least confirm or overrule the initial concern. That's the first. The second, and I actually think this is a much better approach that we employ sometimes with entrepreneurs, is I sit down usually with them and I just ask, what are you trying to build? And they tell me, and I then walk them through what it would require to build. Now, the way you start that conversation, I've usually asked is, tell me what your number is. I believe foundationally everyone has a number on the entrepreneurial side. And the number is, what amount of money do you have to make for you to have this all make sense? And some people will tell you $100 million. And I said, vision of the company, this is, I want to know about you specifically. And then we ask why 100 million. What are you trying to do? What you usually find out is that the real number is usually like 5 million or whatever that changes their lives. And then you ask them, do you want to run this for the next 10 years with me breathing down your neck and other investors? Because if it's truly 5 million, you can get there without raising this capital. And you will find that if you have started building rapport with the entrepreneurs, that you start to get to the true answer of what they're trying to build and what it means. And from there, you can figure out if this is a short term flip or if this is a long term, like it's in their bones that they have to do this. So that's the way I would do it. First of all, is do the conversations to see if you can decipher the verbal and non-verbal cues. And if you feel that this is a deal that still interests you and there are good signs, then it's to have the conversation with the entrepreneurs. That way you
great,
can sort of get a sense of where they would like to end up.
great. So as you spoke, I'm reminded of the reason why I started to keep a certain look. So but I have founders on this call, so I've got to be careful how I let out some certain trade secrets. But I totally agree with you when you say you have to listen. You have to, as an angel, you have to be at the place where you probe. That's the word, and get more content out of the guys. If you listen, you can tell. If you listen, you can hear what they're saying and the things that they're actually not saying. Akim Misa, one of our angels. By the way, we thank you all our dear angels who are on this call. Thank you so much. I can see your messages. Adigboyega Kazim, Akim Misa. I don't know who Sami Popul is, but thank you. Madam Etemore, Madam Helen Emore. Thank you all for coming on this journey with us. Patricia, I see you too. Thank you so much. Akim Misa has a question for you, Ike. It says, How does an angel enforce contracts with founders who are illegally not adhering to agreements? What support do regulatory environment provide for the angel?
Just a qualification. When you say illegally not adhering to agreements, can you just give me a little bit of color on that?
All right,
What
so
type of agreements?
I think I do have a little background on the situation that he's trying to describe here. So, case is an angel goes into a angel investing contract with the founder. You're going to remit this amount of money um, regularly. You would give me reports. You would let me understand what's going on with the business. Um, you would show me how valuation is growing, and all of that angel founder relationship contract elements that are not being adhered to, and so the angel has had his money in there, I think 30, 40K US in that company for several years, and he's not gotten anything back, no report, nothing, and he's even been blanked out. And so that's the background from which this question is coming.
All right. So, um, this is going to be a sensitive response, so take it in stride. I find that angel investing has to be done with the comfort of losing the money. So take that one in stride. Which means that if you put a 5,000 in, it could turn into 500,000, but at the same time, it could turn to a zero investment.
So zero. Mm.
Now, if you are investing into a tech company that is on a cash consumption ramp that requires time for them to sort of reach exit velocity, then it's more likely than not that the returns are going to be zero, because the outcomes usually end up being binary, as in it works or it doesn't work. So that's the first. The second is the construction of some of these agreements. I think it has to take into cognizance the type of company that you're investing in. If you're investing in a yielding type company, then the structure that you have on the agreement can be one that anticipates payout of some kind or a yield of some kind. If it's a startup that is consuming cash, then the possibility of payout is very low. Back to point one, binary outcome. So I would say on the agreement side, I would separate it into reporting and information sharing, which is something that the startup should do. And then there are returns, which I would say is a little bit out of control, unless they are fraudulently doing some things with the cash. The third thing I would say is understanding why they're not paying. So like I said, if it's a fraudulent thing, then it's fraud and you'll take whatever means necessary to address that. But if it is that the entrepreneur in desperation took capital that was taken as yield capital or like like a debt instrument that had a repayment, when they should have been raising equity because there's no way for them to honor a debt repayment on a company that is burning cash, then it's something that just needs to be discussed out. Now, the way to discuss that out might be to restructure. So instead of debt returns, you get warrant coverage, so more equity upside. But I think you have to understand the position that the company is in and so on. In terms of the regulatory environments to deal with this, if you have 20 investments and 40% of them are going to fail, and you're pursuing everyone in some sort of legal way, like a EFCC after them, police after them, then your hands are actually quite full with just doing that work. Um, Versus if you had walked into it saying, I will do my DD up front to screen out all the charlatans, all the people that I think are not like fit for purpose for this sector, and I am now going to make that investment after the diligence, then the number of heartbreak stories greatly reduces the number of people that you're chasing. You'll find that if an entrepreneur has prior investors that they've never done reporting to, there's not much that you're going to change. You're going to get the same treatment as other investors, even though they tell you what you need to hear when they are looking for that capital.
What do you, talking about other investors and earlier investors in a deal before you get in, are there reference check questions that you could share with us? What do you say to a Tommy Davis, for example, on an existing deal that is in that you want to come in? What are the kind of questions? And without it looking awkward, if you understand what I mean.
Oh no, we don't mind awkward at all. You're trying to get to the truth. So one of the very direct questions we ask is just, do you trust this person? Right? It's a very direct question, because you're trying to establish the level of trust. So if the entrepreneur tells you this, do you trust it? And if the answer is, I have to go and check with other investors, then it's not really a good situation for you to be walking into. But what you're trying to find out is, one, execution. Do they execute well? Two, information rights if you have them. Do they share information the way that they ought to? Three, do you trust? And do you think, and this is actually a big one that we found, less for the return of your capital, but more for the longevity of the journey. We always ask, who do they listen to? Because if there's no one that they listen to, then there's no advice that they'll hear. Now, they
Mm.
don't have to listen to us as new investors, but there has to be someone that if there's a message that needs to be conveyed to the entrepreneur of, you are headed down the wrong path, there has to be that person. If you are the first investor in and you're getting the sign that the entrepreneur is not listening to you, now they don't have to do what you say, but they have to be able to take the information in. So if we think that, because we like to lead deals, if we think as a lead investor, the entrepreneur is not listening to us, we decline the lead. We might not decline investing, but we realize that the entrepreneur needs another lead that they can listen to. But I think that's a key thing.
Right. So there's this question written down here. It says, looking back across your investing and operating experience, okay, I think we've taken this already. What is one diligence mistake you made early that today changes how you evaluate deals?
Well, I think I've answered that. We've
Yeah.
just looked at grit, and we've also changed the stage at which we invest.
Okay, so I'm thinking in my head right now, um, because of the land context, because the average angel isn't hands-on as much, then land does a lot of the DD elements for them. So we usually will prepare a DD report and then an investment memo that goes with that. Please share with us how important it is to look at the DD report that land sends to land members, number one, and more importantly, cross-examine that DD report. What's how important is this?
Um, so I think there's a depth on the DD side that becomes significantly more complex the further down the stages a company is. So if you're at the idea stage, not really much to
So,
DD.
quick, sir. Land doesn't do idea stage. We we
Okay,
we, we we've avoided all those type of dramas. If it is not for a land deal, it has to be post revenue. You must have made some
okay,
money. Then got to be a market. At least you must have earned $1,000 at the very least from revenues.
from revs. Okay,
Yes.
so as I was saying, on the idea stage, very quick on the DD side, not a lot to do. Like we just completed one of our portfolio companies just did a Series A, which was announced about 3 4 weeks ago. Behind the scenes, DD held up the deal for 7 8 months.
Mm.
And it wasn't the diligence was bad, is that the company had a lot of safe notes that had different ratchets, clauses, pricings that needed to come into a uniform corridor to get the Series A done. And that took a lot of back and forth.
Mm.
So the diligence wasn't really spent on tech, product, go to market. It was really around contracts and so on. So the diligence report, right? I haven't seen a land diligence report lately, but let's say we were to break it into like 6 components. And I think it's good to read because it should detail for you what the risks are so you get comfortable with the risks. So if a diligence report tells me this entrepreneur is against doing monthly reports. One, he doesn't have the financial acumen to do it. Two, they are raising or they are racing so fast that he just doesn't have time. So if you're accustomed to a monthly P&L, it's not going to happen. But we're going to create a proxy. And the proxy is we will tell you number of customers, we'll tell you cash in the bank, we'll tell you those things. So that's fine. So you understand that from day one, that you don't come calling and saying, I am expecting P&L, balance sheets, cash flow, because it's not going to happen. You've already been informed of these things. It should also assess the risk of the sector. Forget the risk of the investment. All investments are inherently risk prone. It's just a matter
Mm.
of degree of risk. But it'll give you a suggestion as to the risk that you're going to be dealing with. But when we do sort of the DD side, where we do a DD on company and the legal, we do a tech DD, we do a product strategy DD, we do a go to market DD, we do financial, and then we do people. There hasn't been a company where everything comes out with flying colors and you say excellent, excellent, excellent. It just doesn't happen. So if there is a section of the DD that says let us focus in on this risk element, then I think it's something that as investors you spend the time to read to get comfortable. I know that land doesn't do this because they have nothing to do with themselves. They do it to sort of bring in more angel investors. So I'm sure that Solomon is very receptive to. I read section 5 and there's this risk criteria. Can you explain or tell me, give me some more color so I can
Absolutely.
get more comfortable? So
Absolutely.
I'd say the DD part of it, the idea, execution, all those will get you to invest. The DD will calm you down because you now know what the risk elements are and they
Mm.
won't come as a surprise to you down the road.
Ike, this has been a fantastic conversation. I could drag you all along, and but it will not be fair on you. I haven't done me good this much. I have one final question from my end before I allow you run away, and it will be around first. Are you able to tell if there's an amorous relationship between co-founders, and is that a red flag?
Are we able to tell? Yes. You can tell. It's not too hard to hide, especially as you interact. So, for instance, we typically will meet entrepreneurs not once or twice before we invest. During the COVID era, it was a little bit tough because you had to do it remotely, but you can tell. Now, if they are married, it is something you evaluate differently than if they are single.
Okay.
If they're single, I just can't do that deal ever,
No,
because
please come again with that. It's a bit muffled.
I would say it's if they are married or if they are single.
Okay.
If they are married, we might look at some things. If they are single, never. It just won't
Never.
happen. It
Okay.
just,
Won't happen.
it's not for everyone, but just for us, never. Married couples as well is a little bit difficult for us to assess. So, what we are then, because it's the diligence, this is what you're trying to stress test, is that the risk factor is the marriage. So, you want to explore the marriage because that's your risk. So, if it seems as if the husband and wife are not on the same page, that is the risk. And you have to ask yourself, if this doesn't work out between the two of them, what is the equity split? One. What is the product engineering split? Two. Because one might be the sales engine that gets all the customers and has all the relationships. The other one might be the technical engine that builds the platform. Both are very important, but at some stage in the company, you might be able to replace the salesperson. You might not be able to replace the core, the engineering platform. So it's something we have to look at. It causes us concern, which is why we would probe on that. But we would not do a dating type relationship startup. It wouldn't happen.
Thank you so much, Ike. This has been time well spent, and I dare say that our angels also think same. We still dey wait for you for land. You've not been released officially, so we're hoping to get you back. And but thank you so much for sharing with us. Um, this has been
Well,
totally rewarding. Last words, sir.
no, I think this is good. I think some of the times you sort of wonder in your own silo how you're going to deal with the challenges that you see or that you might not see, but you suspect are there. So these conversations, I know that it would have been extremely helpful for me when I was getting into angel investing. If I could have talked to people that have gone through more deal cycles than I've gone through. We do have a deal that we're working on that might actually be land fit, because we love the sector, we love the company, but it's not at rev stage yet. So we think that once it gets to revenue, once they've closed their first deal, it might be something that we would cycle through land to see if there would be participation. But
Great.
thank you very much, Solomon, for the invitation, and wish you all luck as you go through your diligence process.
Thank you so much, Ike. It was great to have you here. We would
All right,
allow
thank
Ike go back to his day now, and I'll circle backwards. Thank you. So we would now go ahead to take a short word from our sponsors. The guys at Leoht Capital made this program possible, the streaming and all of the logistics around it. And as is our practice, we will honor them and let them talk to us, after which we will take pitches from our um, prospective new portfolio members. So we are taking pitches from 𝗘𝗿𝗆𝗏 and 𝗏𝗏. So, but before then, let's receive the gentleman or men or people from Leoht Capital. Is Mr. Pella with us? We can't see you. We can hear you clearly, but we can't see you, sir.
My camera is on. Let me try again. Can you see me now?
We still can't see you.
Uh, okay. Think-
All right. So whilst we wait for him, maybe we will take the pitches quickly so that we don't keep the angels waiting too long. Um, Joseph, who do you have in the room? All right. So, all right, angels. We do have the gentleman from Periculum, Michael Collins. Right. So let's bring him up to the stage.
Perfect. Can you hear me?
I can hear you. Is
Perfect.
he
Awesome.
sharing his screen, Joseph?
No, not yet. Yeah, I'll share my screen.
I think we should get to that quickly.
Okay, let's do that. Um, I don't know if you can see my screen. Can everyone see my screen? Not yet? Should be showing. Oh, you can now? Okay, perfect. Awesome. Okay, I will. Let's do it. So my internet has been a little bit spotty. Hopefully we can do this here. 1 second. Let's do. Can you all hear me? Okay. Okay, perfect. Awesome. Well, good afternoon. Thank you all for having me. My name is Michael Collins. I am the founder and CEO at Periculum. And we are building the financial infrastructure for globally mobile Africans. Now, imagine you're a Nigerian student moving to Canada. You need proof of funds. You need to open a bank account. You need to move money internationally. You need to pay bills back home. And eventually, you need to build credit in your new country. But from the moment you cross that border, your financial life resets to zero. Your financial identity doesn't move with you. Your financial trust doesn't move with you. Your financial history does not move with you. And millions of Africans face this same challenge every day. Now, why now? See, immigration is increasing rapidly, but the financial infrastructure supporting immigrants has not evolved with it. At the same time, embedded finance, stablecoin rails, AI are creating the opportunity to build a much better experience. So that is why we at Periculum, we believe that the timing for this market is now. And this is why we built Periculum Connect. Connect allows users to open bank accounts in Canada, fund GICs, which stands for Guaranteed Investment Certificate, so it's an investment vehicle, move money across borders, pay bills, get prepaid Visa debit cards, and eventually access credit products all on one platform. And our goal is to remove the friction for everyday immigrants in their financial journey. But we knew we couldn't just provide a solution for everybody all at once. So rather than trying to serve every African immigrant immediately, focus on a very specific wedge, which is international students, and a very specific corridor, which is Nigeria to Canada. Now, students have immediate financial needs. They have high intent and become long-term financial customers. Now, over time, we will expand our corridor to include Nigeria to UK, Nigeria to US, and then we'll add other countries like Ghana and so on. And we'll also expand our visa classes as well to include other visa categories, like from international students to workers, and then also to diaspora communities, and eventually provide global mobility banking for all Africans. Now, we're already an existing business before Connect. And at 𝗘𝗿𝗆𝗆, we provide AI infrastructure for financial institutions, and we've generated over $600,000 in revenue last year. And for Connect specifically, we've onboarded 14 students from February, and we facilitated over 400,000 in transaction volume, and we have a pipeline of 5,000 students. We were part of the Visa Accelerator, the last cohort, and we continue to build strategic partnerships with Visa, the credit card company, First Bank of Nigeria, and TD Bank of Canada. So we generate revenue multiple different ways. So today we earn banking referrals, we earn money from banking referrals, transfers, and FX activity, so the margins from foreign exchange. And as we scale, additional revenue will come from card exchange, lending, embedded financial products, and our partners' API. So as we expand, our revenue will also expand. So I know what you're thinking. Is this another remittance company? So the answer is, our moat is that we are not, our moat is not remittance, and our moat is not GIC onboarding, which is guaranteed investment certificate onboarding. Those are just acquisition channels for us. Our moat is the financial identity and intelligence layer that we build around every single immigrant and cross-border user. So essentially, banks and remittance companies move money, we move financial trust. So our long-term vision is simple. Financial identity should move with people. We want to become the infrastructure layer that allows Africans to move their financial history everywhere they go. Think of us building the future financial platform for global mobile Africans. Now, our team combines experience across AI, financial infrastructure, cross-border operations, and we're building from our direct experience. For example, myself, I was born and raised in Nigeria, but I spent half my life in Canada. I went to school and university in Canada, and all the problems that we're solving with this is what I experienced. Not being able to open a bank account, the lack of ease, moving money, etc. So these are the problems that we are solving. So we're currently raising $500,000, and we already have a term sheet, and we already have 200,000 in soft commitments. The capital will accelerate product development, distribution growth, and market expansion. Now, we're building more than just a payment product. We're building financial identity and intelligence layer that travels with people, with Africans, wherever they go. And the goal is for Africans to have their financial history and financial trust move with them, rather than recreate that in every single country that we go. Thank you very much. I don't know if there's any questions or... Yes, I can. Okay. Yes, I was done. Oh, you couldn't hear me clearly? Okay. Um, okay. I can do a brief overview and I can already see questions. So essentially, yeah. Okay. Okay. Great. So 2 minute overview. So essentially, we're building a platform called Connect, and Connect is a financial platform that allows individuals to move funds. So we're basically connecting between Nigeria and Canada. And the initial go-to market is that we're starting with a specific wedge, which is international students, because they have the biggest need. And what we're doing is that we're helping them provide GICs, which are guaranteed investment certificates, which is part of your proof of funds. So your proof of funds are essential in getting access to um, uh, getting a visa to go to Canada. So without your proof of funds, you can't go anywhere. And right now we have partnerships with TD Bank of Canada, where we they are our GIC partner and banking partner in Canada. So you can open a GIC and a bank account from your home right here in Nigeria before you even get on that plane. We're going to establishing partnerships with First Bank of Nigeria to allow for the opportunity to happen the other way. So for Canadians or international students or even Nigerians that live abroad that want to come visit Nigeria, you can open a First Bank account. We have Visa cards that allows you to be able to you'll be able to get a Visa card and it allows you to spend so you have instant liquidity as soon as you get to Canada. So you have that instant liquidity. So that's what we're building. And if you don't mind, I can go to the questions. I see some questions in the chat. So yeah, I'll read out the question and then I'll answer it, if that's okay. So Shola asks, okay, how is this product different from established payment platforms like PayPal, Lemfi, MoneyPoint? Okay, so the it starts with our wedge, right? So our wedge is international students. So we're already embedded in the flow for proof of funds payment for international students. So when you want to go to Canada, so before a student decides that they want to go to Canada, we're already there because we are integrated in that flow with immigration agencies. So every most of the biggest immigration agencies in Nigeria and Ghana use us and send students to us to help them with providing the proof of funds. So this significantly reduces our customer acquisition costs where we are not fighting for customers. We are already embedded in that flow where they are sent to us. So basically when you're trying to get a visa, you have to go to the hospital to go get a medical report, go to police station, get a police report. You come to us to get that proof of funds certificate. So that's our wedge. And then on top of that, we now layer that you will not get a prepaid Visa card. We now layer that you now be able to move money back and forth. We layer all the different stuff on top of that. So that's the difference between what we're doing and the PayPals and the Lemfis because we of that specific wedge. I hope that answered that question. Okay. All right. So, what are your immediate needs of use of the funds? Okay. So, the immediate needs are essentially to scale. So we've already have the what do you call it? The MVP of the platform, which is already out and is being used. So what we need is basically we have 5,000 students in our pipeline. We cannot onboard 5,000 students today on the platform. It'll break, and that's just me being completely transparent. So we need to be able to rebuild, not rebuild. We need to, I guess, buttress the infrastructure that we have, and make it stronger, more sophisticated, so it can handle that level of traffic, right? So that we're now in a situation where we've onboarded bunch of people, and then it crashes, or we have issues with it, because it will end up being like Twitter back in 2008, where it crashed all the time, and we don't want that with this. So that's what the use of funds are for, is basically um, to revamp the platform and make it, the infrastructure is a real stronger, so that it can handle the traffic that we are going to be putting on it. How many users do we have now? We have 14. We actually have another 7 more that are coming on board. Yeah, and we've done over almost 500,000 in transactions already. You had 5,000 paying you. You can't onboard them, so you need more money. Yes, they're not paying us yet, so we have access to 5,000. With all of our agencies that we work with. So we have access to the 5,000. We can't onboard all of them yet until we're able to build the capacity for be able to do that. Those are great questions. I don't know if anybody has any other ones or any follow-up question. Mm-hmm. Great question. Yeah, great question. Hmm. Yeah, no, it's a great question. So we have, so part of our Rails